this is Matt from InvestiQuant. Today is Wednesday, July 22nd, 2020. And yesterday we saw the markets gap up to new recent highs. They consolidated the majority of the day, and then they sold off into the close and closed fairly weak relative to the majority of the session. So what I want to do this morning is take a look at that type of pattern here, and we'll be looking at it in all four instruments, the ES, NASDAQ, YM, and Russell. The intraday setup that we are using is entering at the open 9:30 a.m. Eastern Time as a long, and then exiting at the close of regular trading hours. Now, currently at the time of this recording, we are trading lower, so I'm going to use a gap down for this scenario that we're going to be testing. And the price pattern that I'm going to use to describe the price action from yesterday is yesterday closed at a 50-day high close. So we made a strong close, but we closed under the open. So we have red candlesticks that are taking place at the top of a recent run. So a red candlestick at a 50-day high close is the pattern. We are currently trading lower after that, so this will be based upon gapping down after that pattern. And then I'm just going to add above a 200-day moving average and click View Results. And here we go. So these are the results for gapping down after a day that closed at a 50-day high close, but did so making a red candlestick where it closes below the open and above a 200-day moving average. Historically, this has happened 56 times in the ES dating back to 2003. The NASDAQ, this has happened 47 times, the YM 51, and the Russell about half that at 26. And looking at the win rates, this has been a pretty strong pattern there for the ES. 68% of those have ended up closing higher than the open the following session. NASDAQ has been pretty neutral, 53%. YM, very similar to the ES, almost 69%, and Russell, 62%. So on average, the win rates for these are coming in fairly bullish as a group. NASDAQ's the only one that's not really all that bullish. It's more neutral, but ES, YM, and Russell are all leaning towards the bullish side for this pattern. And I'm not sure why this is, other than perhaps that the ES is just more of a mean reverting instrument than the other instruments. But for ES, the average win on those is sizably larger than the average loss. But that is not the case on the other instruments. So you'll see the other instruments where NASDAQ is about a 1-to-1 ratio of average win to average loss, whereas the YM and the Russell both have larger average losses compared to their average wins. So they have good win rates, but when they lose much larger than what they win. So I don't know why that is so skewed in different directions between the ES and the YM and Russell, but for whatever reason it is. If you guys happen to have an idea why that is, other than maybe ES is more mean reverting than those, feel free to add that to the comments. I'd love to hear your thoughts on that. Hopefully you guys found that interesting. Good luck today, and we will see you next time.